Yeah, gotcha. So you're talking about the permits that are part of emissions trading schemes or cap and trade schemes or whatever you want to call it. So, what are the major markets, Michael? Which which economies have these schemes, and in which case, and which economies therefore have these regulated markets? There are these permits that you're involved in investing in and trading.
So the good news here, Gene, is that not only are there currently multiple countries and jurisdictions, but there are at least a dozen new countries that have announced they're going to launch full emission trading systems, cap and trade systems,
Mm.
as you correctly identified. So the growth of the asset class is going to be tremendous in the next 5 years. The current markets that we invest into today are the European emission trading system. Number two is the UK emission trading system, which was established after Brexit more than 2 years ago. When UK left Europe, they launched their own emission trading system. The third market is the California carbon market, which is in the state of California. The fourth market is the regional greenhouse gas cap and trade market, which is on the east coast of the United States, and it consists of 11 states together on the East Coast in one block carbon market. And the fifth market we invest in is the New Zealand carbon market, which has been around for a long time. It's gone through transformations. It's a small market, but we think it's quite a well-run market, and that's the fifth market. One thing I want to point out, Europe is the most liquid market. It trades probably half of that 4 billion daily, 2 billion a day is the European market. So very, very liquid. Um, and it was launched in 2005. From 2005 until today, emissions in Europe have dropped by 1 billion metric tons per year. That is a big success. And for this reason, I think because of that success, obviously without impeding economic growth, I mean, that's quite important, right? I think that is why we've had these big announcements in the last, even the last 3 months. Brazil is moving legislation to launch a full cap and trade market. India and Japan. Japan, the third biggest emitter in the world. China, of course, launched after doing extensive research on the European market and the California. China launched the world's biggest cap and trade market 2 years ago, covers 4.5 billion tons of carbon. So it's massive. South Korea, Mexico should go live next year. They finished the 2 years of their pilot program, so we're expecting that may be the next fund that we can add into the fund. But there's many more countries. I was recently in Singapore 3 weeks ago, and Indonesia just launched their cap and trade market. Most of the Asian tigers, Vietnam, Malaysia, Indonesia, they're all have plans at various stages. It's taking time but they all have plans to launch cap and trade carbon markets, which is great news.
Right. The US is obviously a major emission from that list of countries. Do you think there's any prospect of the US in? I mean, there are some states, aren't there? I think you mentioned, is that right? But the whole US, there's no federal cap and trade scheme in the US, is there?
No, and I think it's unlikely we're going to get a federal scheme because of the polarization at the federal level. But what we're seeing, Gene, is you have the state of California, and then you have
Mm,
11 states on the East Coast. So we already have those 12 states.
mm.
3 months ago, the state of Washington, the 13th U.S. state, launched its own carbon market. Uh, that market launched 3 months ago, and in the last 6 months, New York state has announced it's going to launch a full-blown cap and trade carbon market probably within 18 months. So things are happening at the individual state level, but I think it's unlikely we're going to get federal carbon pricing.
Gotcha. And where's Australia sit in this? So you said, do you have any thoughts about these ACCUs or ACCUs that we have here? Is that something you're not interested in investing in?
So in the fund, we have a market entry framework. that has a number of criteria that a carbon market must pass in order for us to onboard that into the fund. And there's very practical considerations like access to that market. But then there's other considerations such as transparency, country risk, policy risk, currency risk, and items like that. So on many of those, of course, Australia being a Western democracy, there's no issue. But the actual structure of the ACCU market in Australia is somewhat of a hybrid between the regulated market, which has a cap which gets lowered every year, and the voluntary market, which is unlimited supply effectively. And therefore, when we apply those market entry framework against the Australian market, it simply doesn't pass. It doesn't meet the stringency test because of the fact that it allows voluntary project supply units to come in of very questionable calculation methodologies. And really the other thing is, Gene, durability. When you have a project that I think we can measure that it may have sequestered carbon, but what is the risk of reversal, and how long will that carbon be stored? If it's only stored for 10 years and then released back into the atmosphere, well, then that perhaps hasn't been a very valid carbon credit. So durability and risk of reversal of the carbon then being re-emitted is very high. And so projects such as soil carbon and whatnot, they do have this potential for risk of reversal and therefore low durability. Most projects now, that I think more corporate buyers are looking at more permanent removal, such as direct air capture and other strategies where you can prove long term. You've pulled the carbon out, you've injected it deep underground, you liquefy it, inject it into a storage well for very long-term durable storage, over 100 years or maybe even over 1,000 years. So you can really demonstrate storage.